It's Tuesday and it's time for your Tuesday update. Here's what's new in the mortgage world. So, quite a day today, couple of days actually. Yesterday we had pretty much a big negative day. I'll throw up a bond chart here. You're going to see yesterday was a big red candle, means bonds prices were going down. That means the yield is going higher and rates are going higher at inverse relationship. So yesterday was a pretty bad day in the bond market after a holiday weekend, and the market's closing early last week. So we're off those best levels. Today we got a little bit of a recovery. Didn't start that way. It was looking kind of ugly again, and you'll see the candle that we have for today. You've got that low point there, and it's a big green candle because we improved quite a bit. We're not much better than just flat for the day. It's up 6 basis points here late in the day, but that's a huge improvement from where it was earlier. So, what's been going on with the way this week has started? We had a little bit more data come out on Monday. Some of that was inflationary. There's been some news come out that maybe GDP is going to be looking better than originally projected. So, they're increasing the expectations for GDP. It's jobs week. There's a lot of jobs data out. Here's the thing, something interesting I came across today. Since the beginning of the pandemic until now, there's only been something like 1.4 million or it's under 1.5 million jobs created from when the pandemic started to when it hit now. So all of this recovery and everything, we're barely back to better than where we started, and that's not enough job creation basically. So it's a very interesting dynamic. The big problem with that is that the amount of debt, the U.S. is going about $1 trillion in debt every 100 days. That's just an unfathomable figure. It's insane. All of this is being built on debt, and we're really not building that much. This is a big problem. What we're seeing is, as far as growth and all these things, it's not sustainable. We're talking government debt, we're talking household debt. All of this inflation is being run on credit, basically, and it's not going to be sustainable. So there are better days ahead for rates. Why do I say that? Because bad news is generally good news when it comes to mortgage rates. We're going to have something to pay ahead. Those bills are going to come due for all the debt that's being printed, and it's not going to last that way forever. So there are better rates ahead. Hang in there. You'll see on that chart, we're staying right in between that 101 and 100 range. Things are bouncing around still. So, that's what you're going to see for a little while here, I think. But something's going to happen to break us out of that, whether it be on the top side or the bottom side of that range. We've got resistance and support, and we're staying right in the middle of that. So, have a great rest of your Tuesday and stay right here for the latest and greatest in mortgage news.